Hi guys, welcome back. Now QS had dropped another 4% today. It had been 3 days, and not to scare you or anything, but this movement looks very bearish. Selling off with volume, no signs of rebound and continued selling. So from the technical standpoint, it really looks like it can dip lower. But I still bought the dip today. I bought the dip at this price, 26.6 something. And I still think it might be a shake. QS had dropped a lot from the top. Yes, it was very much hyped up, but at this point, I think all the hype is over already. Whoever that wants to cut loss had cut loss already. At least 90% of them or more. So this run up, I do not believe is driven by retail investors. And the fact that recently, the biggest selling volume was this day. So it was the most resistance to pass through, and it passed so easily on this day. That was the day I bought in the morning. And more shaking all the way up, growing slowly, steadily, and then suddenly fell down so hard. But look at the lowest point today, 26.41. And then you look at this day, the highest resistance, it was 26.41, the lowest of today. So tell me if it's not the institutions doing shaking. I don't know, of course I can be wrong, but I'm betting on this, and that's why I bought the dip again. Right now they're taking advantage of the fact that they have no products. A lot of people felt frustrated over this company. All the stocks had rebound except this one. Look at the EV sector. Everything had rebound, but QuantumScape is still lying down on the floor. The short report accused that to be a scam, a fraud. But I don't think so. If you want more fundamental analysis on QuantumScape, you can actually watch my first video on YouTube. So I gave out the reason why I don't think they are a scam. They might be overvalued at that time, but I don't think they are a scam. And I gave out my reasoning there. And if the US government wants to increase their R&D budget, why can't QuantumScape benefit from that? And if in the future, so many transportations or sectors need to be electric, solid-state battery would be crucial. Like I said, in China, I think somewhere they are developing heavily into solid-state battery, and so is Japan. So there is no reason why the US government would not want to incubate some leaders of the solid-state battery field. That doesn't sound possible to me. Now take a look at the CATL, the leader of battery in China. Their market cap is 1.05 trillion yuan, 150 billion. But of course it's because they are the leader of the industry and they have the mature factory, client base, supply chain and existing battery. They're manufacturing for big brands in the world. Tesla is one of them. So that's why they're expensive for a reason. But look at that, they're making all-time high every day. And I do believe that we are heading into an even more fierce competition between China and US for new technology, EV sector, new energy. So there is no reason why the US government would not want to incubate some leaders for the battery sector, since the two countries would be heading into such competition. So this is my bet on the American side. Especially right now, all the stocks in the EV sector have been flying already, rebounding quite strong, and QuantumScape is still lying down on the floor. Now the short seller report said that they're a scam, and a lot of people are getting fearful on the company, so do mind the risk. It's just, I always thought they're not a scam. Ever since my first video on QuantumScape, I gave out my reasoning why I don't think they were a scam. It was hyped up by institutions, not the company. They did not give out anything that's not true to hype up the share price. So right now, this is my bet. Even though the technical analysis looks very bearish, I still bought the dip. So please mind the risk. But guys, we had a great day today, but even so, we need to stay alert right now and not forget about the pain after some days of running up. In this run up, I said that I see Nasdaq making all-time high, and right now we are actually very close to making all-time high. Nasdaq growing 0.3% more, it's at all-time high. And I would be more alert because I don't know how far it would run after making all-time high. The thing is, during the weekend video, I said we have 3 supports below. Nasdaq doesn't have too much room to drop. But the thing is, if it keeps running up like this, it would have room to drop. let's say it run up for another 1 or 2 days, going strong, and suddenly dip back to any support is just like climbing up slowly with the stairs and coming back down with the elevator again. Now, even though I don't think we have to drop to this support, but even the first and second one, it is still 3% dropping for the first support or 4 to 5% dropping for the second support. Now, if Nasdaq drops this much, the individual stocks, especially our growth or small caps, can drop 10 to 20% easily on one day. So that's why, guys, watch out for the sudden dip when the market turns. There's the meeting on Wednesday where they would talk about the inflation, or one news that says the Fed is in talks about reducing QE or in talks with increasing interest rates. A simple news like this can drive down the index. And whenever it had a very sudden, quick dip, the stocks would be dipping quite hard. Just keep that in mind. It might not happen right away. Maybe we have a day or two or so, making all-time high, running a little bit more, greed, a little bit more euphoria before making another quick dip. And that's when you want to have some cash to buy the dip. So the whole time I insist to not chase the stocks that's gone up high, but instead buy the dip. Chasing the stocks that's flown away gives you limited room of growth, but more room of dropping. And it's the same thing with the Chinese stocks. I think right now the Hang Seng Index and the Shanghai Composite are having some divergence because the Hang Seng Index had been having a pullback for some time now. And I think it might be enough time or room already near the end of the pullback. And yet the Shanghai Composite Index did not fall at all, still above, staying high for a while. So I said a few times I suspected to have another quick jump and come back down for pullback. So that's why we saw a lot of the mega cap, the internet giants of Chinese stocks were mostly consolidating for the past 1 to 2 weeks. Like I said in the weekend, Baba and Baidu, for example, not growing the whole time, consolidating with Hang Seng Index. But the solar sector like JKS had been going up since the Shanghai Composite Index just kept remaining in a high level. Something we also need to watch out for. So now the blockchain sector had popped. What's the next sector we should watch out for? And I would have to point out the NFT sector again. TKAT, what we had been trading. Last week I said 19.3 is the strongest support. Today it already reached 19.3. If the blockchain sector is up, there's no reason the NFT sector is down. So I suspect that might be next. Like I said, it has potential of a meme stock. So that's why I took a position. It's a little side bet, a little bit gamble. But I think it's important to have a little bit of a gamble stock because this way we can hold our long-term position longer, so then we don't have the urge to keep looking at them and end up selling them by mistake. So I always think having a little bit gambling bet, it's helping you hold your long-term position longer and be more patient with it. As long as you are playing with the money you are willing to lose, then you can be more calm because they're very volatile, a lot of up and down, and it's not good to chase when they're up high, but better to get in before and wait for the pop. As well as the SPAC sector. Like I said yesterday, a lot of the SPACs are down to the safety price of around 10. So if you have patience, you can get in some of the ones you like before and wait for it to pop one day, or you can get in when you see it start rising. You can watch out for them first. I gave out some ticker examples yesterday already. Let's see if I have any one that I have missed. Oh yes, it is DOYU and Huya. They're similar movement anyway, so I will just take DOYU as an example since I had a position before, but I sold already long time ago. And this is the trend line I drew long time ago. That was the trend line it was falling with. It broke out, had a good run up in February and came down ever since. And look at this. Recently, it fell below this trend line again. See, it had a nice breakout on last Tuesday and come back down to backtest, you see, exactly at the trend line I drew before. This is the institutions very good at driving the price. So it is almost clear that this is the bottom. So I think it can grow from here. So I think it's okay to open a position at this price. Stop loss at 7.8, so only risking 5%. I think risk-reward ratio is high, much more upside than the downside. So instead of chasing the stocks that's gone up high, I would rather buy the dip of stocks like this, okay? Unless it's the sector that you want to get in for a longer term. That's the different story. Like NEO, for example, this is a company you want to get in, then it would be a different story. That, like I said, any price you buy in, it's okay. As long as you have the conviction and you don't care about the short-term profit. But DOYU, I think it's okay to open a position now because I've got a few questions asking for DOYU and Huya, and I treat them the same because they're merging, right? And I think they're beaten down because of the uncertainties of the merger and also because they were both backed by Tencent. And right now, the anti-probe for Tencent is uncertain for a lot of investors, so they are trying to stay away from DOYU and Huya. Like ARK Invest had been selling them for a long time already. They kept selling almost every day. But while they're selling, I see institutions buying the dip. People are scared, but sometimes you gotta see what the institutions are doing, right? News are news. We can't trust all of them. What's more important is what the institutions are actually doing. This movement is made by capital, so I think it's okay. Risk is only 5%. A lot of people ask Huya and a lot of people ask TIGR, right? Believe me, I have been watching TIGR for a long time and I wanted to get in too, but there's never the chance. And like I said yesterday, there's resistance level at 29 and 30. So what's the point to get in right now and make 2%? Why not wait until it breaks the resistance, backtest, confirm its valid support? You would be just paying 3% more, but not wasting the opportunity cost. And plus, with the stock that's gone up quite high, if the market dips suddenly, it will have more room to drop versus stocks at the bottom. That's why I've been watching the whole time and did not enter. But I got in other position and gave me a lot of profit too. So it's okay that you miss part of the run. If you believe in this company for the long term, then you don't have to care about this run that you have just missed, right? Because if you believe it will grow much more in the future, then $1 or $2 doesn't really matter. I got some questions asking about Mesa. Mesa is consolidating, dropping because of Dow Jones. There's a divergence between the Nasdaq and Dow Jones now, and obviously that the Nasdaq is outperforming. But Mesa was a hedge against the tech stocks anyways, so it needs to at least wait until Dow Jones finish consolidating. Right now it closed at 9.55, slightly below the 5MA to be 9.56. It doesn't look super good, but at least it's not dropping with volume. So you can wait a few more days. Plus you should have had the stop loss anyways, right? And also the Canadian stocks. Now, Canada was the first country to reduce the QE. So that is why a lot of the Canadian growth stocks have been getting really attacked recently. And the one that's the worst is Next Innovation. And I think another reason for it to drop so hard is that its recent IPO again. Once it dropped below the IPO price, it tends to keep dipping before the expiration date of the lockup period. I have a few Discord members in it getting frustrated, and in my opinion, I think it might be near the bottom when you feel so frustrated. So at this point, I wouldn't cut loss, because what if it bounced back up after you cut loss? This kind of stocks, it can drop hard, but it can also grow fast once it hit the bottom. Last week I said buy at 0.88 and trim after the rebound, and this morning it rebounded to 0.95. So at some point near 10% jump, but I didn't see it in the morning, so I didn't remind to trim. But right now it's not a good deal to trim. If it can bounce back up in the next few days, then maybe. If you did not set stop loss before and you held it all the way through now, I really don't see the point of trimming now. And same thing with ESE Entertainment. I think we are near the end, near the bottom already. So if you held it all the way through, I would not trim or cut loss at this moment. If you feel frustrated, chances are it might be near the bottom. On the other hand, Well Health look bullish in comparison. It looks like it's broken out last week and consolidating, and wait for the next breakout again. I'm still holding, being patient with it. Now, take a note. This is another one definitely worth for you to watch out for, okay? I mentioned this here before. It is a company called Cloud9, ticker symbol CLGUF, and for Canadian ticker CNI. It is also a blockchain sector, but it had been on the floor for a very long time, dipping like a rock. I've been watching it for a very long time, waiting for it to bottom, and it looks like it might have bottomed, or at least near the end. So I suggest you to watch out for this one. It has a very interesting business model, very interesting concept. Why I like the concept is that it would allow users to share their own facility at home, connect to the shared server, and mine on their own. So anyone can do mining anywhere in the world. Especially right now, we have big problem of the energy used in crypto mining. So anywhere in the world means wherever with the cheapest electricity or most accessible with renewable energy would be more in use because it's all shared. So it might be able to solve a problem. But of course, right now it's just a concept. We have no proof whether how much they're executing it. So maybe that's why it has been falling like this. But I think that's the point of penny stock. It's that you invest in a startup when they're cheap, and if they happen to make it through, then you're looking into 10x or 20x. So definitely a penny stock to watch out for. Okay, I hope I have covered all the questions, and if not, leave me a comment. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.